terms of payment are an advantage in competitive markets. Customer-friendly payment terms can really help close deals. But exporters also need to protect their own cash flows and receivables with their payment terms.
And the right balance of that is what we call credit management. So every company doing business abroad should have a good credit management practice. Hi, I'm Melanie Carter.
And I'm Dominique Bergevin.
Welcome to Trade Talk.
When it comes to credit management, the worst case scenario is really where an exporter has already shipped their goods or provided the service and the customer doesn't pay.
Exactly. And for many reasons, we know that foreign debts are so much harder to collect than domestic ones.
Good credit management has to be viewed as part of a daily activity in order to protect your cash flows and your receivables.
So here we'll enumerate 3 things that a company can start by doing to have a good credit management approach. So the first one is know the customer. Second is set clear payment terms. And third is protect your receivables.
And most importantly, they need to do this at the onset so that before shipping goods or selling services, all of this is in place.
Right. So let's do a little bit of a deep dive on those 3 points. The first one being know the customer. So you'll want your client to complete a credit application on which you'll find essential information such as the legal name of the company you're going to be dealing with. You might also ask for banking information, and it's strongly encouraged to get at least 3 referrals, credit referrals from companies that are already doing business with your potential client.
This seems basic, but sometimes in the excitement of landing a new contract, this step is sometimes overlooked.
Exactly. So the second point, or the second key point to good credit management was setting clear payment terms.
And this happens in the contract. We've had a previous episode of Trade Talk where we were talking about the ABCs of international contracts. The key message there is really to spell everything out in advance. Timelines, payment milestones, payment periods, put everything in writing at the onset. So if there is a dispute, you can go back to that contract for reference.
Right. And the third key point to remember is protecting your receivables. So let's hear from Vicky Kahi, CFO at Fidus. She will discuss her approach to good credit management. Hi, Vicky. Thank you so much for taking the time to come in and share a little bit of your experience as a Canadian exporter. So first and foremost, tell us a little bit about Fidus.
I would love to. So Fidus is an electronic product design company. We have customers that come to us with ideas, and we help them think out their ideas, design them, produce a prototype, and from there help them go into mass production.
Excellent, thanks. So I'm assuming that credit management is part of your day-to-day operation. Tell us a little bit about your credit management policies and when it was established.
Well, I have only been with Fidus for 5 years, but it was one thing that was established right from the beginning. Obviously, if you work hard for a living and you don't get paid, that can be a real problem. We had EDC involved from quite early on to make sure that we weren't losing on any of the sales that we did make.
Excellent. I was actually going to ask you about what tools you use. So you mentioned EDC being one of them. What other tools do you use to make sure that you establish a good credit management?
Well, we use the accounts receivable insurance, as you mentioned, but we also do a credit check on any new clients. These days, the internet is just a wealth of knowledge. We do a lot of LinkedIn and Google research. And we also are quite adamant with a brand new customer. We ask for deposits, a proportion of the sale up front as a deposit to ensure that we aren't left without payment.
Excellent, thanks. So you've had experience with our accounts receivable insurance because of a customer of yours was not paying you. Can you tell us a little bit about that?
Sure. We had a client that came to us, and schedule was very, very important. We had to do a rush job. We had people working day and night. And they had a client in England that was to receive this product, And so when it came time to delivering the test units, they had lost their customers. Something had happened in the marketplace that they had decided they didn't want the product. And so we had sent them test products, and as usual in electronic product design, you go back and forth with test products and make some tweaks. But when we tried to deliver the final units, they wouldn't receive them because they said if they received them, they would have to pay us. So this went back and forth, and then after the required time, we had to bring EDC in. And everything was well documented, but your technology specialist went through everything and realized we were not at fault. And we ended up receiving our funds, which was just tremendous. It made a huge difference to our bottom line that year.
Excellent. That's really good to know. One thing that I do note is that you mentioned that everything was written and well documented, something that is so important exactly in a case like this, or in a case of dispute or such.
Right.
So.
And pictures. Pictures seem to be even more important than I thought, and we were able to give lots of pictures of the data and the results, and so that your technology specialist was able to review.
I'm glad. Thank you so much for coming in and sharing that.
In the case of Fidus, accounts receivable insurance was the best solution. Another option is to sell the receivable to a factoring company, which pays for the receivable immediately, so the exporter receives the cash.
Exactly. So just to make sure that the factorer won't charge if it has difficulty collecting from the end customer. We call that a non-recourse type of factoring. So to learn more about credit management and how to protect the bottom line, visit edc.ca and read our white paper on the topic.
Until then, keep talking trade.